Hello everyone, welcome back. I got some really good ones for you today on this Friday, October 31st, 2025. A lot's been going on with the markets. That's what we're going to be focused on for today's video. So welcome back. Glad you made it. Glad we could hang out together. And let's dive right into these markets, shall we? So we had the Federal Reserve cut interest rates on Wednesday. That was a widely anticipated cut. So the market the market was getting what it was quite certain it was going to get. So when the Fed cut interest rates on Wednesday by 0.25%, or 25 basis points, markets, weren't really concerned with that. They kind of saw it coming. But we did see a little bit of a curveball in Powell's ensuing press conference and Q&A, where he starts talking about how maybe the December rate cut is not a foregone conclusion. So kind of tamping the market's expectations back down. Like, let's not get too, we're cutting rates today, but let's not get too giddy about December. Like, that's not a certain thing. And the market going into the Fed's rate cut decision on Wednesday had priced in like a 90% chance of another cut in December. But, since Powell's jawboning, that probability has come down to like 60%. I still think we're going to get a rate cut in December. So we got a rate cut on Wednesday. That was the second rate cut of the year. December will be the third rate cut, and then we'll get another like 3 rate cuts for 2026. Maybe it'll be 2, maybe it'll be 4, but you kind of get the idea. Like, the Fed has started cutting rates. This was the second cut. Then we're looking at the third. Then we're looking at fourth, fifth, sixth. Market likes that. Like, that's the assurance that the market does like. But the market doesn't like when Powell's like, but I don't know about December. That might get pushed off into 2026. The market's like, oh man, like, I was getting really excited, man. Like, you got me all hyped up on Mountain Dew, and now you're kind of like taking away my December rate cut. Like, I want that cookie. You know what I mean? I want that juice. And Powell's like, I don't know. Maybe I'll give it to you. Maybe I won't. Like, I am giving you the punch bowl. You are getting drunk off it, but maybe I'm gonna cut you off for December. I don't know. We'll see how it goes. So that kind of sent markets, well, I don't know what's going on. But overall, guys, the market has been digesting the Fed burrito, as we call it, quite well. So in the first 24 hours, 96 hours after a Federal Reserve decision, we kind of got to digest the Fed burrito. The waters really aren't safe for like day trading, guys, because the algos are like really feeding. So up is down, down is up. Like, you're getting stopped out. You're like, okay, we're going down. Oh, we're up. And then I'm gonna fade the rip. Oh, we went up higher. Okay, I'm gonna cover my short position. Oh, now we're tanking. Okay, now I buy. Oh, now we're tanking lower. Like, the market will take you for a ride those days immediately following a Fed rate decision. So just let the market calm down a little bit. Let the market digest this burrito. It seems to be going down quite well. We did see the 10-year yield pop a little bit today, but like nothing freaky, guys. If anything, to me, that's traders selling some bonds just to take a little bit more risk in the stock market, okay? So nothing to write home about. If that 10-year yield were like skyrocketing, that would be freaky. If the 10-year yield were like falling through the floor, like, that could be kind of freaky too. So the debt market, kind of stable right now. Yields have popped a little bit. That's the debt market kind of buckling a little bit. But if money is leaving the debt market just to move out into the stock market, and ultimately the debt market knows cheaper money is coming, it's not really a fear trade. It's nothing to get worried about, nothing to write home about really going on in the debt market. If anything, we have a healthy upward sloping yield curve. The 2-year yield's at 3.6%, the 10 years at 4.09%, and then the 20 and 30-year yields are at like 4.6%. So we have that yield curve. It's healthy. It's sloping up. That's what you want to see. That's kind of the debt market telling you, I see growth on the horizon, but I also see higher inflation. So debt market's reacting fine. We do see the dollar coming up a little bit today, guys, but it's nothing crazy. If anything, it's traders that were shorting the dollar going into the Fed rate cut, covering the short position. That's a little bit of buying, just a little bit of rewinding. Markets are kind of front running that Fed rate cut. They're like, oh, you're about to cut rates. I'm going to trash the dollar. And now once we're on the other side of that rate cut, they cover the short position. You see a little bit of pop in the dollar. But I'm not seeing like fear in the markets today. So things are kind of stable, guys. Like, nothing to freak out about. So looking over at that stock market, we have the S&P 500 at 6,843. It's up 0.31% today. Cool, we'll take it. We got the NASDAQ at 23,739, up 0.67%. The NASDAQ likes the that more rate cuts are coming. You know, the NASDAQ also likes some of these tech earnings. We saw Amazon's up like 12% today. Their Amazon Web Service, that's like their cloud unit, it's very profitable for them, and revenues have just been growing beautifully for them. So the most profitable aspect of Amazon's business is doing really well and looks to be doing better and better and better and better, and that's kind of got Wall Street giddy. We like Amazon on this channel, guys. Their vision is to sell everything to everyone. I mean, give me a better vision for your business. How do you compete with a guy who's like, well, what I do is I sell everything to everyone? It's like, dude, where do I sign, you know? And they have a monopoly, guys, and it's doing quite well, okay? Quite well. So we like Amazon on this channel. We did see Meta come down like yesterday, 12%. They have a one-time tax bill that they've got to pay. They have, what else happened to them? A little bit of AI fatigue there. You know, Mark Zuckerberg's kind of FOMOing into AI, and investors don't really have warm fuzzies about where all that's going. So Amazon's selling off a little bit, but guys, I'm not worried about, or excuse me, Meta's selling off a little bit, but I'm not worried about Meta, guys. Mark Zuckerberg, he's like a lot younger than Elon and just as hungry and just as brilliant. You know, we're going to be dealing with this guy for decades, okay? I call him a reptilian alien who lives in the hollow moon, but regardless, he's lethal, okay? I would never want to bet against Meta. If you have Instagram or Facebook, congratulations. You're part of his world's largest unpaid workforce. You're worth about $100 a year just in free clicking around, liking your friends' cat photos. You know, you're just paying Mark Zuckerberg through the nose and his shareholders through the nose. So whenever you look around out in public and people are just staring down at their phones, they're just pumping your bags, guys. Billions of people are just pumping your bags. Not to mention Mark Zuckerberg has big, you know, he's a visionary. He has big dreams of like the metaverse, AI, where all that's going. So don't count that guy out, man. He's crazy. And you might want him on your payroll. Same with people like Elon Musk. Same, again, with Amazon, selling everything to everyone. Sure, the Mag 7 are very concentrated. It's becoming a larger and larger percentage of the S&P 500. Like, it might be, correct me if I'm wrong, but it might be like 37% of the S&P 500's market cap comes from the Mag 7. But pick a couple of them, guys. Ride the lightning. I'm not saying to be like a Mag 7 maxi, because at any moment this AI bubble could start to buckle. But you need exposure to these companies where every individual and company on planet Earth is their customer. Think about Google. Same thing. Think about Microsoft. Same thing. If you're an individual or a business, I don't care. You give Microsoft money every month. And is that going to change next month? Low probability of that. Same with companies like Google, the information mafia, you know. They're disruptive, okay? So they like create new markets, they disrupt existing markets. Like, think of Google, how they sucked every library in the United States into their share price, like into their straw. Like, all the knowledge known to man has now collapsed into your phone. I mean, that's what you're using. You're using your phone to look up everything now. You're not going to the library and like reading books, and you should be. You're giving Google money right now, guys. I'm talking to you on YouTube. Google owns YouTube. So I'm pumping Google's bags right now for free, and you're pumping Google's bags right now for free. Like, get some of that money back, you know what I mean? Or don't. But yeah, we see S&P 500 moving up, NASDAQ moving up a little bit more, that tech-heavy NASDAQ. Dow Jones, pretty flat for the day. Dollar up a little bit, but it's nothing to get freaked out about. The 10-year yield up a bit today, but it's nothing to get freaked out about. So guys, I'm feeling bullish, okay? I'm feeling bullish. I feel like the bubbles are about to get bubblier, and we've been saying that for 3 years. You know, we've been riding several bubbles on this channel, guys. Started the channel in 2022, gold, Bitcoin, tech. There you go. Now we're like, oh gosh, like we're up there, guys. We're at high altitude right now. But am I saying to like freak out and sell all that? And, you know, let's talk a little bit about that. Okay, if you were overweight gold this last few years, it was like 15% of your portfolio. Well, now it's like 30% of your portfolio. Sure, you could go ahead and rebalance. Rebalancing is a very powerful tool. You could take your gold allocation back down to like 10% or so, and then put that, you know, roll that cash into other positions. So stocks or crypto or energy stocks, or, you know, you can rebalance here, but nothing's really changed for me, guys. I still like gold and silver. I still like crypto. I still like mega cap tech. I still like mega cap energy. I still like a little bit of nuclear to diversify your energy portfolio. You know, we did see, as far as nuclear is concerned, we saw stock ticker CCJ, Kamiko, which is like the only mining stock I've ever shilled on this channel. It's a uranium miner. We don't shill gold and silver miners. We like stacking a little bit of physical gold and silver and like platinum for the long term. Like, we're stackers, which is a different hat from trading and investing, and we wear that hat. But I've never been a big fan of gold and silver miners. But I do like Kamiko for nuclear, for the other yellow metal, which is uranium, guys, that yellow cake. Man, we went up 25% this week. Pretty wild week. We're over 100 a share. Look to buy the dips, maybe. I don't know. I'm going to leave that to you. But yeah, you guys, nothing's really changed here. I still like Amazon, still like Meta, still like Google, Nvidia, Apple, Microsoft, Tesla. Tesla's been plugging away with their full self-driving. We're Elon fans on this channel, have been for years. I still like mega cap energy companies like, you know, Chevron, Exxon, ConocoPhillips. You could look at Shell, or, you know, like Halliburton or Marathon or Occidental Petroleum. Like, just look at those large mega cap energy producers by market cap. Pick a few of those big boys, create a little basket, throw in a little bit of CCJ for nuclear. Cool, guys. For financial alpha, we like BLK, BlackRock, Goldman Sachs, JP Morgan. There you go. A little bit of risk to market. So if you're like, well, where's the risk right now? Like, where should I be watching for, like, you know, gray swans? Well, commercial real estate. Commercial real estate could be a little risky. Regional banks could be a little risky. Private equity, private credit could be a little risky. But do we talk about any of those things on our channel? No, not really. So you're going to have to go, you know, put on YouTube commercial real estate and go look for things to worry about. Those are kind of what the market's looking over at. But I'm feeling bullish, guys. I'm feeling bullish. All right. So yeah, nothing has really changed for me. Just, I wanted to give you guys this quick update. Here's one thing I'm going to leave you guys off on. Okay. Here's your last little gold nugget, and then I'm going to let you go. So the Fed is, you know, I've been pressing the Fed a lot lately, saying like, oh, the Fed needs to be focused on getting inflation under control. Like, why are they cutting interest rates? This is an intentional rate policy. The revolving door between the Fed and the Treasury is like destroying your country. They should totally be getting inflation under control, but they're cutting rates. Why? Idiots, right? Like, that's been kind of my tune for, like, I don't know, a lot of the last videos we've had. Well, the Fed would say to me, dude, we're worried about rising unemployment, okay? We're trying to get out ahead of rising unemployment. We have, like, these mega cap tech companies are laying people off. We want to start cutting interest rates to get out ahead of that. But the reality is, guys, Amazon is not going to lay off workers, and then Fed rate cuts are going to come and incentivize Amazon to rehire those workers. Like, those workers are being displaced through trends like automation and AI. They're not coming back. Then the Fed cuts interest rates. Then Amazon borrows cheaply, buys their own shares with it, stuffs it into AI, stuffs it into chips, stuffs it into their cloud unit, and the employees don't really come back. The share price goes higher. So we kind of have this perverse mechanism in markets right now where share price rewards layoffs, guys. If you're not really discerned, you're thinking, oh, you know, Amazon just laid off a bunch of people, ergo the stock price should fall. No, Amazon lays off a bunch of people. Amazon borrows cheaper, invests in everything except for people. The people stay gone. Amazon marches higher. Stock price marches higher. That's really what's going on. So yeah, be kind of understand the mechanisms and the currents and the policies and the knock-on effects of policy, right? Kind of what we talk about on this channel. So going forward, we'll see what probabilities of a December rate cut do. If those probabilities of a cut move up, market's going to like that. Those probabilities of a cut keep falling. That could keep a lid on these animal spirits. But otherwise, guys, onwards and upwards. The beast system will keep inflating. as far as I can tell. So I hope this video finds you doing well. I'm doing well. Like, subscribe, comment, share, whatever. You guys are awesome. I hope you get something out of these videos, and we're just going to keep going, all right? Thanks for hanging out with me. Till next time.